The greatest enemy you face on the floor, or staring into the flicker of the ticker tape, is not the man on the opposite side of the transaction. It is not the bank. It is not the politician writing new legislation designed to complicate your life. The enemy is internal. It is the restless urge to do something. It is the impatience. If you were to take a hard look at your ledger, if you tallied every single commission, every fractional point of slippage, every loss resulting from an entry you forced simply because you could not tolerate being idle, you would discover a brutal, humiliating truth. 80% of your account erosion, 80 cents of every dollar you have surrendered to this business, is self-inflicted damage. It is the price you pay for demanding action when the market demands patience. I tell you, stop measuring your progress by the quantity of trades you execute. That is the mentality of a gambler chasing fleeting thrills. Start measuring your profit, your genuine, sustainable success, by the quality of the weights you endure. The ability to sit still is the foundation of genuine speculation. Subscribe now, like this video, and leave a comment. By doing that, you help more people see this message, and you let me know this work is not in vain. Every great speculator, including Jesse Livermore, known as Larry Livingston in the text, paid dearly for the lessons of impatience, accepting steep market penalties deducted directly from his capital. That crucial, costly education was masterfully preserved by Edwin Lefebvre in the 1923 cornerstone of financial literature, Reminiscences of a Stock Operator. Reading this work provides the serious student with an essential training ground, allowing you to safely live every disastrous emotional error and brilliant reversal without exposing your own holdings to those severe psychological and financial pressures. However, to accurately translate the timeless wisdom recorded nearly a century ago into applicable principles for the modern electronic environment, the rigorous annotated commentary provided in the Max Davidson edition is essential. A link to this essential edition is provided in the description below. We begin with the fundamental error. The amateur trader believes profit is earned through ceaseless motion. He thinks if he is not trading, he is not working. He mistakes effort for effectiveness. This is a disastrous conceit. The professional, the man who survives the long haul, understands a profound paradox: profitable inactivity. Trading, when executed correctly, is an act of sustained waiting, punctuated by brief, decisive, and forceful action. Your profit does not materialize from the time you spend executing the transaction. Your profit is incubated and grown during the extended period of sitting still, allowing the perfect setup to materialize without your reckless interference. Your objective in this game is mathematically simple: maximum profit with minimum activity. The best trades are often the ones you did not make. The capital you preserve today is the firepower you need for the colossal opportunity tomorrow. When impatience takes the helm, it always steers you toward noise trading. This is the trading driven not by analysis, but by the nervous energy that seeks release. Impatience forces entry before the market has confirmed your theory. You read the tape. You believe the stock must rise from this level. You anticipate the turn, and because you cannot bear the thought of missing the first few points, the so-called easy money, you plunge in early. What guarantees an early entry? It guarantees you pay a premium on price. You enter the trade at a level where the professional money is likely still accumulating or distributing. By entering early, you subject your position to immediate, unnecessary drawdown. You have initiated the battle with an unforced error. You see a stock consolidating. It is gathering strength, perhaps, or merely taking a breath. The patient man watches this consolidation, defining the exact breakout point. He waits for the confirmation, the volume surge, the price thrust past resistance. The impatient man jumps in during the middle of the consolidation. Why? Because he believes he can predict the end of the consolidation. He is wrong. He enters, the price fluctuates naturally within its range, perhaps dips slightly lower to shake out the weak hands, and because he entered too early, his position is already suffering an uncomfortable loss. His stop is hit by market noise. The truly painful irony is this. The impatient trader often enters just in time to get stopped out before the trend he correctly identified actually begins its major move. He pays the market commission for the privilege of warming up the seat for the professional. He cannot differentiate noise from signal, and his impatience guarantees he reacts to the noise every time. This leads directly to the silent killer of all speculative accounts: the compound erosion of transaction costs. Every click of the mouse, every order slip submitted incurs a friction. This friction is expressed as the commission charged by the broker, the spread between the bid and the ask, and the slippage that occurs when the market moves against your large or poorly timed order. These are tangible costs. They are not merely theoretical ledger items. They are a systematic subtraction from your capital base. When impatience drives high-frequency trading, when you force 10 trades where one would suffice, these small costs multiply rapidly. They operate like a steady, silent bleed. You might execute a trade and make a fractional profit. But if you execute 20 such trades in rapid succession, you are simply lining the broker's pockets. The profit you retain after these frictional costs is often negligible. Worse still, these costs systematically drain the power of compounding from your account. Compounding requires stability and sustained gain. If a significant percentage of every gross gain is siphoned off by commissions and bad entries, the net return becomes linear rather than exponential. You are constantly digging out of a hole you created yourself by demanding movement. The patient man who makes 5 strong confirmed trades in a year, holding them for the long haul, will inevitably outperform the restless man who makes 100 forced trades, because the patient man allows his profits to ride and grow, unburdened by the constant taxation of transaction fees. He preserves the integrity of the compounding engine. Never anticipate. This is the 4th commandment of the surviving speculator. Never gamble on what you think the market will do next. Never bet against the weight of evidence. Impatience encourages prediction. It whispers, "Get in now before everyone else sees it." True speculation, true discipline, demands waiting for the principle of confirmed signal. We wait for the pivot. We wait for the validation. We wait for the market to prove that our preliminary analysis was correct before we commit $1 of capital. How do you wait for confirmation? You define your trigger points with surgical precision. If you are waiting for a reversal, you must wait until the downtrend is definitively broken and the price structure begins building higher lows. Until that happens, the stock is still in a downward spiral, regardless of what your gut feeling suggests. If you are waiting for a breakout, you define the exact point of resistance. You do not buy a fraction of a point beneath it, hoping it carries through. You wait for the decisive thrust through the resistance, confirmed by aggressive volume. The impatient man buys the anticipation. He buys the hopeful scenario. The disciplined speculator waits for the fact. Until the tape speaks clearly, undeniably, and forcefully, silence is not merely an option. Silence is your only truly profitable option. Your job is not to forecast. Your job is to react decisively to what the market presents as fact. Impatience is very often a direct byproduct of psychological boredom. Many individuals confuse the thrill of action with the pursuit of profit. They came to the market looking for excitement. They expect the ticker to entertain them. They crave the rush of entering a position, the immediate feedback of movement, the momentary illusion of control. This confusion is fatal. The market is a ruthless business. It is a calculating machine designed to transfer capital from the emotional many to the disciplined few. It is not a theater. It is not a casino designed to provide amusement. If you find yourself trading because the afternoon is dragging, because you feel compelled to watch the screen and must therefore be involved, you are not speculating. You are paying the market to entertain you. And I assure you, the price of admission for this private show is always your capital. The market will gladly take your money and give you a few minutes of adrenaline-fueled false hope in return. Mastering boredom is therefore essential. You must learn to sit in front of the screen or walk away entirely, knowing that the correct course of action is no action at all. You must accept the reality that weeks of comfortable, profitable idleness are preferable to one single day of reckless, anxious activity. Once a profitable position is opened, impatience does not vanish. It merely changes its form. Impatience in management manifests in two disastrous ways: fear and panic. First, fear. Trimming winners too early. The market moves in your favor. You have a satisfactory paper profit, but the restless urgency takes hold. You begin to fear the market will take back the gains. You cannot bear the thought of seeing that paper profit shrink. So you cash out, grabbing 2 points when the security was preparing for a 10-point run. This impatience cuts the legs out from under your strongest performers, ensuring your winners are always small. Second, panic, stopping out during minor pullbacks. No significant market move, up or down, occurs in a straight line. There will always be reaction swings. There will be volatility designed precisely to shake out the weak, impatient money. The impatient trader is terrified of seeing his account dip back into the red, even momentarily. When the necessary pullback occurs, the price dropping just enough to test the new foundation, the impatient speculator panics. He stops out, forfeiting his position only to watch the stock immediately resume its major advance. A good trade requires patience in management. It requires letting the position breathe. You must ignore the day-to-day noise and focus solely on the structural integrity of the move. Wait for the predetermined stop to be hit, or wait for the full, justified realization of your target. Do not allow the internal noise of restlessness to dictate your exit. This brings us to the critical distinction between a speculative setup and a mere market opportunity. A truly good trade is what I call an A-grade setup. It is a configuration on the tape that aligns all objective parameters: volume, price action, confirmation, and the foundational market trend, so powerfully that you are entirely comfortable waiting for it and committing to it. If you are anxious, checking the ticker tape every 5 minutes, refreshing the quote screen, or constantly moving your stop loss, I guarantee you one thing: you have either overpositioned yourself, or you have entered prematurely on an inferior setup. Anxiety is the market's immediate assessment of the quality of your decision. A quality setup, an A-grade opportunity, demands patience because it requires you to wait for the alignment of rare, perfect circumstances. When you finally commit, the trade should feel comfortable. It should feel almost inevitable. It requires monitoring, yes, but not constant, anxious intervention. Conversely, inferior setups, the C and D grade gambles, demand constant attention and adjustment because they lack the necessary structure to withstand market volatility. They were born of impatience, and they perish quickly, requiring frantic management until they inevitably wipe you out. Your goal is to restrict your activity solely to the A-grade setups. Learn to pass on the merely promising, the merely interesting. Wait only for the undeniable. The greatest returns on Wall Street do not come from day-to-day maneuvering. They come from capturing major moves. This requires the strategic advantage of long-term waiting. A major move, an extended campaign that might capture 20, 30, or 50 points, often requires weeks or even months of disciplined waiting for the foundational trend or the entire market cycle to turn in your favor. The impatient trader focuses on capturing scraps. He tries to scalp 1 or 2 points in fast-moving stocks. He seeks instant gratification. He is constantly moving in and out, paying transaction costs and subjecting himself to the constant emotional drain of short-term volatility. The patient speculator waits for the harvest. He recognizes that the small gains captured quickly are always offset by the frequency of small losses and the totality of the commission erosion. He understands that trying to capture a single point 5 times is geometrically riskier and significantly less profitable than capturing 5 points once. The man who waits for the entire market to confirm a shift in direction, waiting perhaps 3 months for the confirmation that the foundational business climate is improving or deteriorating, is positioning himself for a profit that dwarfs the collective gains of 1,000 restless day traders. Patience is how you capture the meat of the move. Impatience forces you to chase the bone scraps. To eliminate impulsive behavior driven by the restlessness of impatience, you must introduce structure. Impatience surfaces most aggressively when the speculator lacks a concrete plan. When he is searching aimlessly through the ticker list, looking for something to happen. You must develop a systemized watch list. This list must consist only of instruments, stocks, or commodities that meet your precise, objective, predetermined criteria. These criteria might involve specific valuation, specific sector leadership, or a defined technical structure. If a security is not on the list, it does not exist. The beauty of the watch list is that it eliminates the random search that breeds impatience. You are not passively hoping something occurs. You are actively monitoring predefined conditions. You are waiting for these specific instruments which you have already vetted to fulfill your mandate. If the 5 stocks on your watch list are not currently presenting an A-grade setup, then your mandate is simple. Sit still. Preserve capital. Wait. This disciplined approach transforms waiting from a psychological burden into a structured, necessary part of the speculative process. You are working, even when you are not trading, because you are engaged in active, structured surveillance. You are waiting on purpose. Let us return to the most fundamental principle of survival in this ruthless business: capital preservation. Every time you force a trade out of impatience, every time you take a reckless C-grade entry, you are risking the capital required for the one truly exceptional opportunity that will eventually arrive. Think of your capital as ammunition. The market is full of false targets, decoys, and shots that are highly unlikely to hit. The impatient man fires his ammunition indiscriminately, wasting his resources on fleeting, low-probability plays. When the clear, perfect target appears, the undeniable A-grade setup that promises 20 points with minimal risk, the impatient man is often tapped out. His powder is damp, his capital is gone, lost to 100 unnecessary skirmishes. Patience is the ultimate shield. It preserves your financial strength. It acts as a defensive strategy, ensuring that when the odds are overwhelmingly in your favor, when the signal is clear, the trend is established, and the profit potential is vast, your entire arsenal is ready and intact for the decisive strike. Do not deplete your ammunition. Wait for the moment when you know the strike will count. The market does not reward speed. It does not reward constant movement. It rewards precision and cold, calculating discipline. Your success in this demanding game of speculation is directly proportional to your ability to sit on your hands and manage the internal demons of restlessness, anxiety, and boredom. Master the comfortable wait. Learn to love the stillness. You will find that patience is not a passive virtue. It is the most aggressive and potent tool you possess for sustainable wealth creation. It is the core of professional speculation. The market will pay you handsomely for your ability to do nothing. Never forget that.